So today what I'm going to be taking you through is my DTFX simplified strategy, but I'm going to be taking you through a certain component of the strategy. I've shown you the strategy as a whole. Now I'm going to be breaking it down into little components, and you'll understand as I do this. First things first, the most important thing is to always mark up our chart. Whatever fair value gaps, imbalances we see, old highs, old lows, swing points, supply zones that just really stand out in the now, because we are trading now. You don't need to worry about what happened 10 years ago. We are literally worried about what's in our face, and we mark it out so that when price does come to that zone, we have an understanding of what to anticipate at that zone. And that's as simple as it gets. So I'm marking out imbalances on the monthly, daily, weekly, and the daily. And hopefully the more you see me do this, you'll understand what I mark. It's kind of pretty straightforward, but you have to have an understanding of what draws price. And once you have an understanding of that, then you'll know what to highlight and what supports price and what repels price. Those are the things that I'm marking out here, and you'll understand why I'm marking them out here, because then when we drop down to our lower time frame, to where we find our setups, then everything comes together. So today what I want to be breaking down in simple detail is when price. So when I was breaking this down and I was telling you in terms of looking for your setups, your higher time frame has to come first. Once you have your higher time frame, it's either we wait for a break of structure, which can be like so or like so, or we wait for what? A displacement. And a displacement can look like so. I just wanna let's see, bring this here. Displacement can look like so. So in a displacement, there doesn't need to be a break of structure. So we'll highlight that, and then when price comes back, we take advantage. So remember, in terms of setting our setup in motion, we either need a BOS, break of structure, or a market structure shift, whatever you want to call it, or a displacement. A displacement is when price moves in a volatile direction, leaving gaps or imbalances. Okay, where do we see this? Well, we seek this out on the 1 hour. The 1 hour sets everything in motion. And now what I want to show you, so this is gold, and right here we've been having a pretty straightforward down motion. But am I worried about a down motion? No, because why? I like to align myself with the higher time frame. The higher time frame has been bullish. You can check that for yourself. So obviously then what I'm waiting for, since we've been bullish, and as you see, price was not coming down to fill in gaps on our daily. It's only just come down yesterday, which was Monday, and now we've tapped into a daily imbalance and a daily support. And at that level, we first came down here, we traded up. Did we create a BOS? Looking at this, no. What does that mean? No setup. And then now we've come back down, but then we did not sweep liquidity here. But this is a little nuance now that I am adding to your game, is we did come back down and touch what? Our order block or our support level here, which is this purple line on the daily chart. So right there, we did come back and touch that. So to me, that presents another setup. But then you'd ask me how. So price comes down, goes up, comes down, goes up, but does what? Creates an imbalance, creates a displacement to the upside. So now we have that gap that I was talking about. When price leaves the gap, we don't have a BOS, and see what happens. trade right here goes back up. So now, will this work all the time? No. Will this work most of the time? Yes. That's trading for you in a nutshell. So then, remember what I have. I have a higher time frame bias. I have a higher time frame support level. And then now, it's did what? It's given us a signal in the market telling us, hey, we might have that bullish setup that you've been looking for that aligns with our market structure. So once we find that area, what do we look for? Well, we always need to look at opposing areas where price is going to have some kind of problem. What are opposing areas? That can be a resistance area, that can be an imbalance, that can be an old high. These are going to be our draws of liquidity where price can turn on us. And all that is, or all that means to me, is that this is an area where I must look to take my profits and move to the sides until what? A setup presents itself again. So once we've marked everything out, what do I need to do then? Drop to my 15-minute. On my 15-minute, what am I waiting for? Nice and simple. If this is our 1 hour gap, price makes a low, makes a high, makes a low, makes a high, does not break immediately. Let's see if it broke here. Yes. As I said, I explained the difference between a breaker and a BOS, but I'll explain it again. So a break of structure, pretty simple. Break of structure. When I'm talking about a breaker, we don't need to see a break of structure. So price can be doing this, but then if I know that this is my POI, all I want to see is price just break the structure one time, tap back, and then my entry is right here. This is my entry. As soon as price gives me that little break, that little breaker, that's why breaker, break of structure, two different things, small nuances. And as you see here, price was doing what? Up, down, up, down, up, down. What happens here? Breaker immediately. You pull the trigger because why? We are still within our order block area. So this was going to be an immediate entry. That's why when you're trading, hopefully you are on your chart and you are trading whichever session you trade. But this strategy really doesn't need a session. You just need to be very aware of what you are doing, and that's because now you need to know where to enter and where to exit, because you don't want to over leverage yourself. Sure, I could take setups like this here, like and do this here, but then that's too much. Like, hey, what if it comes down on me? So okay, so excuse me, that video just got cut by mistake. But as I was saying, so if I had to do this here on trades, this to me is a little bit too much risk. Yes, it works out, but then now, what if it doesn't? How much am I going to lose? I'm going to lose way more instead of if I know exactly where I am. As soon as we break here, I know my rules. As soon as I break, enter on the closest OB candle, stop loss right there. Your first take partial is at your 50%. After that, you start moving your stop accordingly. As I said, that's something for a video for another day. And then what do we have here? Remember what I said. Once price hits your target, step out the market. Watch, I don't know, hey, watch some solo leveling or some shit. Watch an episode, then come back. You look at your chart from a higher time frame. If your bias is still in play, we have not taken out any specific liquidity zones, then what do? You drop back, and then whenever price comes back to your zone, I have a rule. I have to see a liquidity sweep. When price does this, so let's say we have our BOS here, and then our BOS here, and then price trades away and then makes its way down, but then does not take out any key liquidity points. What must I wait for before I enter a trade? Can I enter a trade here? No. Price has to take out that liquidity. That first area where price first came in, tapped, and then traded away, I must see that area being hit first before I take that trade, like so. Very, very crude example, but just for you to understand. And we have that case in point right here. So I'm just going to be very crude with this. Case in point, boom. We've taken out liquidity, then we've traded away, created a break, price created a gap, did not give us a chance to enter. It was in a hurry. Let's see here, price is still, but then look what has happened. Price has hit our what? 50%.